Hello and welcome. Investing is one of the most powerful tools for building wealth, but like any powerful tool, it has a dark side. Lurking in the shadows are sophisticated scammers who prey on two things: our desire for financial freedom and our lack of experience. They design traps that look exactly like golden opportunities, and they are incredibly good at what they do. Losing money to a market downturn is one thing, it's often temporary. But losing your life savings to a scam, that's permanent. That's why the first rule of investing isn't buy low, sell high, it's don't get scammed. In this video, we're going to shine a bright light on this dark side. We'll expose 5 of the most common and devastating investment scams targeting beginners right now. By knowing how to spot these red flags, you can protect your hard-earned money and invest with confidence. Let's build your financial defense system. The first category of scams is the most seductive. They promise to eliminate the one thing that's part of all legitimate investing: risk. The first scam is the Ponzi scheme. This is a classic, but it's been modernized and is still incredibly effective. Named after Charles Ponzi, this scam works by paying returns to earlier investors using money from new investors, not from any actual profit. Here's how it works. A smooth-talking promoter promises you high, consistent returns with little to no risk. They might say they have a secret algorithm, an insider strategy, or exclusive access to a private investment. The returns seem amazing at first, which encourages you to invest more and tell all your friends, but there is no real business. The entire operation collapses when the flow of new money slows down, and the scammer can't pay everyone back. They then disappear with all the funds. So, what are the red flags? The first is guaranteed returns. In real investing, absolutely nothing is guaranteed. High return always means high risk. Another red flag is overly consistent returns. The market goes up and down. A strategy that never has a down month is a major warning sign. Also, look out for unregistered investments and sellers. Always check if the investment and the person selling it are registered with the SEC in the US or your country's financial regulator. Finally, be wary of secretive or complex strategies. If you can't understand how the money is being made, it's probably because it isn't being made legitimately. Now for scam number 2, the pump and dump. This scam is rampant in the world of small-cap stocks and, more recently, cryptocurrencies. Here's how it plays out. Scammers buy a large amount of a very low-priced, thinly traded asset, like a penny stock or a new crypto coin. Then, they launch a coordinated marketing blitz using social media, spam emails, and fake news to pump up interest and create a buying frenzy. As legions of new investors rush in, the price skyrockets. The scammers then dump all of their shares at the inflated price, causing the value to collapse and leaving everyone else with huge losses. The red flags for a pump and dump are pretty clear. Be extremely wary of unsolicited hot tips from unknown people on the internet, especially if there's a sense of urgency, like buy now before IT takes off. Notice if there's a lot of hype over substance. The promotion is all about momentum and getting rich quick, with no real discussion of the company's business or its financials. Another big sign is concentrated promotions. You see the same stock ticker symbol being shilled by dozens of different accounts all at the same time across social media. Next up, we have scams that impersonate legitimacy. These are more insidious because they wear a suit and tie, mimicking real financial institutions to gain your trust. Scam number 3 is the phony regulator or recovery pitch. This is a cruel double-dip scam that targets people who have already been victims. After you've lost money in a scam, or even a legitimate market loss, you get a call or email from someone claiming to be from a government agency, a law firm, or a recovery service. They say they can help you get your money back. For an upfront fee, they might have official-sounding names and even have some of your personal details. Once you pay the fee, they simply disappear. The red flags here are crucial. A legitimate regulator or recovery service will never ask for an upfront fee to return your money. Also, government agencies will not call you out of the blue to offer recovery services, and watch out for pressure to act fast. They say the offer is only good for a limited time to stop you from doing your research. This brings us to scam number 4, the unlicensed financial advisor. Not everyone who calls themselves a financial advisor is qualified or ethical. An unlicensed individual or firm offers to manage your money. They could be operating a Ponzi scheme, or they might just be charging exorbitant fees for terrible advice, pushing products that give them a high commission, not what's actually best for you. How do you spot them? Check for credentials and registration. In the US, you can verify an advisor's status on the SEC's Investment Advisor Public Disclosure website or FINRA's broker check. Look for credentials like a CFP, a certified financial planner. Beware of commission-based pressure. If their income depends entirely on you buying a specific product, their advice isn't objective. And finally, if they are vague about fees, that's a problem. A legitimate advisor will be completely transparent about how they get paid. Now let's talk about the modern digital trap. This is a scam driven by FOMO, the fear of missing out. Scam number 5 is the fake brokerage or trading app. With the rise of financial technology, scammers have created sophisticated, but completely fake, trading platforms. You might see an ad for a trading app that promises easy profits, often with an AI-powered bot that does the trading for you. You sign up, deposit money, and the app's interface shows you making fantastic gains. The problem is, it's all fake. When you try to withdraw your profits, you're hit with endless fees, impossible conditions, or the website simply vanishes into thin air. The red flags. First, it's too good to be true. An AI bot that can't lose is pure fantasy. The biggest tell is difficulty withdrawing funds. A legitimate broker makes it relatively easy to get your money out. Also, watch for clone firms. They use names and websites that are very similar to well-known, legitimate companies. Always double-check the web address. And finally, they'll constantly pressure you to deposit more money, urging you to deposit now to maximize this opportunity. So, what is your ultimate defense plan? It's the rule of 3 verifications. Knowledge is your best armor. Before you invest a single dollar, make this your non-negotiable habit. First, verify the person. Check the credentials and registration of anyone offering investment advice with official regulators like the SEC or FINRA. Second, verify the investment. Is the investment itself registered? Search for its official prospectus. And third, verify the story. Be deeply skeptical of guaranteed returns, secret strategies, and urgent offers. If you feel FOMO, that is your cue to slow down and do more research, not speed up. Remember, it is far better to miss out on a questionable opportunity than to lose your entire investment to a guaranteed scam. The most successful investors are often the ones who avoided the most disasters. Let's quickly recap the 5 scams we discussed. The Ponzi scheme, which pays old investors with new investors' money. The pump and dump, which artificially inflates an asset's price before crashing it. The recovery pitch, which demands a fee to recover money you already lost. The unlicensed advisor, who gives bad advice while not being qualified or registered. And the fake brokerage, which uses a phony app or website to steal your deposit. If you take only one thing away from this video, let it be this: a healthy dose of skepticism is the most valuable asset in your entire portfolio. If an investment sounds too good to be true, it is, every single time. Protect your capital, invest in what you understand, and build your wealth slowly and steadily. That is the true path to financial security. Thank you for watching. If you found this helpful, please like this video and subscribe for more content to help you invest safely and smartly.